So our panel is going to be moderated by Michelle Baio. Michelle is the founder and CEO of Finnovator Inc. She's also a Money 2020 Rise Up alumni. She's been part of the Women in Payments Global Council. She's a FinTech advisor, CPPO member, and the chair of our membership committee, and a board member at the Open Banking Initiative of Canada. And she's a producer at The Social Movement, which is an Amazon docuseries. So I'm going to turn it over to Michelle, and she's going to introduce our great panelists. Enjoy the discussion.
Thank you so much, Jennifer. I'm really excited to be here. I hope that everybody's enjoying the first virtual CPPO symposium. This is my third year attending, and even though it's virtual and not in person, I think it's going to be one of the best just based on the content and the reach that we're having even beyond the prepaid ecosystem. In 2020, this has not been an easy year for many industries, but as you can see, prepaid is still taking a leap forward and driving business to new heights. I joined prepaid in 2015 at Incom and watched as we launched the first GPR at retail in 2015, when our current total sales in Canada were only at 1.8 billion and have grown by $1 billion since 2015. And it has been so impressive to watch this market grow, and all of these challenger banks that we have today here have exponentially grown across Canada. I am so honored to be moderating today's panel on how Canadian challenger banks are growing and accelerating in 2021 and beyond with this incredible, impressive group of payment experts. And I'm really excited to introduce our panelists today. We have Hannah Zidi, who is the Senior Manager of Regulatory Operations at Wealthsimple. We have Kartik Kamat, who is the Senior Director of Digital Banking at EQ Bank. I have Miro Pavlatic, CEO of Stack. Michael Fox, who is the Vice President of Risk and Compliance at Coho, as well as Saud Aziz, who is the Head of Strategy as well as Operations at Revolut Canada. So in today's session, as Jennifer mentioned, we will be addressing regulatory challenges, latest innovation, effects of COVID, as well as what is the future vision for all of these organizations. I will do my best to try and ensure in this 40 minutes that we get in all of our questions and that you get to hear the exciting announcements that everyone on this panel has to share. So I'd like to start today's session by having each one of the panelists share a little bit about their current role as well as their career. Hannah, let's start with you.
Sure. So I'm Hannah Zadi, and I've worked in the risk and compliance space for a couple of years. I work from everyone from early stage fintechs to big banks. I've led global regulatory change projects for the Big Five that impact operations in APAC, UK, and Europe. I've also advised fintechs on go-to-market strategies, on designing compliant business models and products. I'm currently at Wealthsimple, and my role is to help launch new products outside of the wealth management space. So most recently, I've helped launch Wealthsimple Crypto, which is like North America's first registered crypto platform where you can buy, sell, and hold Bitcoin and Ethereum. Also working on Wealthsimple Cash, which is a hybrid high-interest saving and spending account that comes with a prepaid Visa card. I'm also currently sitting on the board of Open Banking Initiative Canada, where I work with Michelle to advocate for the fintech voice on open banking in Canada.
Thank you, Hannah. Miro?
Hi, I'm Miro Pavletic. Formerly, I was CEO of Stack. I still am, but currently as well, I'm General Manager of Global Banking for Credit Sesame in the US. Prior to that, I was working in capital markets, CIBC, foreign exchange, international remittance, building some very large white label platforms and extending out financial services and international remittance to partners out there. Prior to that, I worked at a startup called CSAM, building digital wallets for the big banks across North America. Ended up getting acquired by MasterCard, doing a stint at MasterCard. And then I was very fortunate in 2005 to work with Richard Branson and launch Virgin Mobile in Canada. Built that business up 0 to 1 million customers, $0 to $1 billion of revenue in just over 5 years, and ended up getting acquired by Bell.
Wow. Thank you, Miro, for great insights. And Kartik?
Sure. So I'm Kartik Kamath. I lead strategy, analytics, and payments for EQ Bank. What that means is that involves working with the leadership at EQ Bank to shape the strategy and long-term innovation agenda for the digital bank, helping the bank make data-driven decisions, as well as shaping the future of payments, products, and modernization for the digital bank. Prior to joining EQ Bank, I worked as a strategy consultant with the Boston Consulting Group, largely working with financial services companies in the Canadian market. And prior to that, I'd worked with Capital One for their US business banking and Canadian credit card division, largely using analytics across a bunch of different functional areas such as credit risk management, customer acquisition, fraud mitigation, and customer operations. Excited to be here and look forward to a great discussion.
Thank you, Kartik. Michael?
Hi, I'm Michael Fox. I work at Coho. I've been in financial services for about 20 years now, and organizations like Canadian Tire Financial Services, PC Financial, Capital One, Meridian Credit Union, and now Coho. At Coho, I'm the vice president of a couple of functions, risk and compliance, also people and culture. Throughout my career, I've largely been in the risk space, but I actually started in a marketing analytics capacity, but throughout my career, always using analytics to solve problems for businesses.
Thank you, Michael. And Saud?
Hi, I'm Saud Aziz. I'm leading our Canadian expansion at Revolut. I've been at Revolut for nearly 2 years now. A little bit of what my day-to-day looks like is helping bring our products and offerings into the hands of Canadians. As Jennifer was mentioning a little bit earlier, it's interesting working for a global company where when we were first thinking of expansion, generally companies will think about US, and then there's this misconception, we'll just do maybe 5-10% more work, and then we could get Canada for free as well. So a lot of my job is educating and sort of showing the nuances of Canada and what consumers need over here. Prior to this, I've been in fintech for a little bit. So prior to this, spent some good time with Michael at Coho. I was working in payments and user operations over there. And then prior to that, I was doing some financial services consulting.
Great, thank you. Well, I'm really excited to get started. So let's start today's session with a hot topic. How has your business and consumer behavior changed due to the global pandemic? And I'm going to start out with Hannah.
Yeah, so I mean, in 6 months, we've seen almost every sector of our economy become more digitized, and this has never been more prevalent than it has been in financial services. So because of this at Wealthsimple, we've actually seen explosive growth across our product suite. And just to give some background, we have 5 retail products currently out on the market. We have Wealthsimple Invest, which is our robo-advisor and our flagship product. We have Wealthsimple Trade, which is the zero commission trading product. We have Wealthsimple Cash, which is why we're here, which is a hybrid saving and spending account that comes with a prepaid card and spending features coming soon. Wealthsimple Crypto, which is a trading platform, crypto trading platform, and Simple Tax, which is a tax filer that's free to use. So growth has actually been pretty unequal across all our products, and it's been really interesting because it's been impacted by consumer behavior rapidly shifting as they respond to different market forces and socioeconomic circumstances. So for Wealthsimple Trade, for example, we've experienced explosive growth. We've seen a lot of clients, young clients, trying to get in on market volatility that we saw a few months ago. We also launched Wealthsimple Crypto 2 months ago. Initially had a wait list to see what consumer demand would look like. We had over 130,000 people sign up, and it's been one of our fastest growing products since we've launched. Just today, we actually announced a new round of financing, making us a fintech unicorn with like a $1.4 billion valuation. So super excited about that. On the other hand, though, we saw growth slow down for a few months on our robo-advisor platform, which, Wealthsimple is only 6 years old, and our clients have never seen an economic downturn. So this downturn impacted all managed portfolios across the industry, and it resulted in some clients panicking. Our portfolios are optimized for downturns, so our clients were cushioned from significant losses, and most have recovered from pre-COVID levels. But the interesting shift we saw was that people have gravitated towards self-directed investing, and that hasn't changed. That demand has remained. The other product we saw slower growth on was Wealthsimple Cash, where we offer high interest saving rate, but given the interest rate environment, we haven't been able to offer a higher interest rate, and so we've seen a decrease in users, and we're expecting this to change once we launch our spending features.
Wow, congratulations. Yeah, that's some exciting changes definitely happening at Wealthsimple. Let's go over to Michael at Coho. Might you share with us all of the changes?
Yeah, the first thing we had to take care of on the business side was actually the people at Coho. We had this very real transition to remote work with people working with kids around, people with all sorts of other stresses around. And one of the things we really focused on early on as a business was providing our team with the tools to keep running at the pace that we were running at. From then, we knew as soon as this started, there was going to be a recession and there was uncertainty impacting our business. So we did slow down hiring for a bit. And then what we found was that with people working remotely, shifting their spend to digital, and also checking out more remote financial options, our business actually doubled. And so our growth has actually done quite well through COVID. So we've been able to accelerate hiring. It hasn't been all sunshine. We did have a Save product that we have been in the process of launching, and we did have to slow that down a little bit because of the interest rate environment. But overall, it's actually been an easy thing for our business to adapt into with consumers shifting to more digital options.
Oh, great. Thank you for sharing. Kartik?
Sure. So over the last 3 quarters, I would say EQ Bank has seen substantial growth almost across all metrics. For example, customer signups increased almost 140% this year as compared to 2019. This was largely across our flagship product, the Savings Plus account, which offers an everyday high interest rate with the flexibility of a checking account. We also launched the Joint Accounts product a few months back, which has seen much stronger uptake than we had initially thought. We were also fortunate to cross $4 billion in deposits last month. And what was really interesting there was it only took us 3 months to grow our deposit base from 3 billion to 4 billion, when in fact it had taken us more than 18 months to go from 2 billion to 3 billion. So that was really interesting this year. And so we sort of spent some time trying to understand, what was essentially causing this. And so the biggest realization, I think, which has been highlighted by Michael and Hannah as well, is Canadians are just becoming much more value conscious, and that essentially means 2 things. One is they just care a lot more and are paying a lot more attention to their finances and to the services they receive. But secondly, they just have a lot more time to do research, which wasn't necessarily the case pre-COVID to some extent. And so all of this has essentially just been a really interesting set of learnings for us, which we've been able to uncover. And that, as similar to all of our other panelists, we've seen substantial growth for EQ Bank.
Yeah, I think that's one of the most interesting trends, is that every banking service had to be online. Therefore, the advantage for all of you was the online application process. Was something that was becoming more and more common. Mero, share with us all of the insights that have happened at Stack.
Yeah, there's a massive. I'd love to kind of deal with the elephant in the room and the real problems that the majority of people are going through right now. There isn't a substantial amount of tools out there to solve the major problem, which is just people feeling very vulnerable about the money they have and not having enough. When you look at traditional banking products out there, you kind of get this consistent negative feedback that they allow you to extend yourself with overdraft and credit, and then you kind of get punished when you can't recover. And everyone's heard the statistics out there that the majority of Canadians and Americans are living paycheck to paycheck, and the biggest piece of stress the average person has is opening up their bank account and not knowing what the balance is, because you don't know what fees were applied. And all of a sudden you see that maybe you might be in an overdraft and you might be getting hit with 30% interest, and you might have a zero balance altogether. And the shame of not having enough balance to transact is a real fear. And that really got amplified with what happened with the pandemic and COVID, because a lot of individuals lost their jobs. So what we've learned with the audience that we have is that there's an opportunity to not only give you insight in terms of your cash, but insight in terms of your credit as well. Because one of the biggest impacts to your credit score actually comes from your day-to-day banking, and a lot of people don't know that. And the biggest thing that is impacting it is your bill payments and the frequency of bill payments. And that's not necessarily that apparent to consumers, because when you open up your bank account, you don't necessarily see how your day-to-day banking is actually impacting your credit score. And when your credit score gets impacted, that really impacts the lending products that are served to you. Because, you know, when you go from a credit score of about 650 to 700, individuals don't understand that, you know, that might be an interest rate on a credit card from 9% going up to 29%. And that impacts you on a daily basis. And, you know, we've read a lot of articles, especially in the last weeks. Even, I think there was one in the start that said, you know, even the rich are living paycheck to paycheck, that there are a majority of six-figure income individuals out there that essentially don't have more than $1,000 in their bank account, because essentially what's happening is no one's really taught or provided them the insight in terms of how to properly save. So we see that as a massive opportunity to start giving insights back to the consumer. And that's the whole evolution that we see with the challenger banks out there. Is that, you know, what we've seen over the past, 5 or 6 years in Canada is kind of challenger bank 1.0. You know, let's create the utility on a digital platform, get everybody on top of it, and that'll be great. But really the evolution that I see is challenger bank 2.0. Let's start providing some really rich insights to consumers that pulls them out of essentially the debt that they have, living paycheck to paycheck, and really moves them into the next phase of their life, which is all about savings and all about achieving their goals.
Thank you. Yeah, I fully agree. And Saud?
Yeah, exactly. So touching on what some of the other folks mentioned, we're not publicly launched yet. We're in our external beta testing phase, but we've seen our waiting list grow quite a bit in the past few months, and the users that are in our beta testing, we've sort of seen their behavior switch a little bit. It switched from using us as more of a card product and really doubling down on our remittance function. So that was one of the things that we're very happy that we're able to provide during this time, just making it easy and frictionless for people to be able to send money abroad and receive it from abroad so that they could take care of their family and friends. So that's something we've seen a pretty big growth in. And we've been hearing from customers where during COVID, they want to be able to send funds abroad. And some banks, if you want to send funds, you have to go in person to actually conduct a wire. That's something that just should not be the case. And we were very thrilled to be able to sort of solve for that need right away.
Yeah, I think like it's been such an important point for consumers to have access to better pricing and better services. So as we look to innovation and cost savings, because I do believe they're the true drivers of the consumer interest in challenger banks, can a few of you share your current top offerings and what your thoughts are for the future? And Saud, I'm actually going to start with you.
Got it. So one of the things that we always try to do at Revolut, wherever possible, is to try to do things in-house and do it ourselves. And that really helps us, one, with respect to cost. It also helps us with respect to innovation because we're able to move at the speed that we want and deliver products that we think are best for the market. That is one of the challenges that we have in Canada, where because of the regulatory environment, it does make it a little bit more tough for us to bring to market some of the things that we're doing. Luckily, there's some pretty strong partners for us to work with in Canada, but that has been one of the primary goals of ours as we're sort of expanding globally, is to try to build a machine, meaning no matter which market we go to, we already have the infrastructure to offer our core features and try to do it as much as we can ourselves. So that has helped us. And any time that we're saving any sort of costs on ourselves, we can always have the ability to pass those forward. And those help us really get the consumers services that they're not able to get at sort of phenomenal prices.
Yeah, and can you share with us what is the top feature that drives people to Revolut? Just as some people on this, I think we have 100 people watching at the moment, and some may have not had the opportunity to look at Revolut or some of the other challenger banks. So I'm trying to get some highlights of what's that feature that kind of drives them your way. Absolutely. So it's the core features are our FX rate, and that goes in twofold. So pre-COVID, if you were to travel, you have a Revolut account. Anytime you spend, you're getting it at the interbank exchange rate,
And the easiest way to understand that is just Google USD to CAD. That's going to be the exact exchange rate you get. And you don't have to hold USD in your wallet. We will do the conversion for you using your Canadian dollar balance at the best rate available. So that's one part of the offering. So that's on the card side. And the same sort of goes with the remittance. So if I wanted to send funds abroad in a currency that I don't currently have, we will do that conversion for you. And we will offer you a rate and sort of access to payment rails that you wouldn't be able to get. And that's something that Canadian consumers, myself, I didn't know that there were options for those until I actually had a need for it. So that's sort of our primary feature offering. And what we've seen as a result of COVID is it sort of switched towards more remittance and not so much on card spend.
Yeah, thank you. I think that's really important to have that highlight of that feature. And then I'm going to go over to you, Michael, because I know Koho has quite a bit of features that have driven a lot of your consumer gain over COVID.
For sure. And our guiding principle is always that the features or products that we're launching also be things that are in the best interest of the consumer. And we don't launch products if they don't meet that bar. So first, we have a core bank account with payroll, a virtual card for spending that you can get in real time, money movement. And within money movement, we have a K2K feature so you can transfer for free and in real time to other people within Koho. We have lots of features in our app connected to the card with like goals, real-time notifications, and we have a cashback feature, which is quite generous with many ways to increase your cashback, being referrals or whatnot. We have merchant partnerships that get up to 6% cashback with various merchants as well on top of that. So that there's many ways that these things can stack and you can get 16, 17% cashback on some of your purchases. We also have a premium offering with additional cashback on top of that and no FX and some other features. And this year we've been getting into different lines of business. So we are launching a high interest savings account imminently. It's open to friends and family right now, but it will be in the market very shortly. It's going to be 1.2% interest rate to start, and then we will go up from there. And we've been getting into some lending programs that help consumers. So our first one was early payroll. So people who need to get a portion of their pay early can do that, really in recognition of the tough environment that we're in right now. And then we have launched a credit building product that has had excellent take up so far, where people can take out a small loan and use that to help establish themselves and build their credit up, which has been great for young demographic, great for the new to Canada demographic, but also great for people who maybe had some issues in the past, but now they're on the path to rebuilding it.
No, that's great to hear, because I think that's one of the pieces of prepaid that can truly be driven to credit. And I think it's an important move to help the underbanked and underserved to try and drive to establish themselves through products that you guys are carrying across the board here.
Definitely.
Yeah, Mero, can you share with us your top features at Stack? Why are people going to Stack, and maybe a little bit of insight on Credit Sesame?
Yeah, absolutely. I mean, that's the thing. We launched Sesame Cash right in the middle of COVID. We launched it in the beginning of May, and we saw just incredible traction throughout the past several months. We've signed up over 500,000 customers in a little over 4 months, and it's really just kind of showing that individuals just don't want to stand in line when they're waiting to get their banking products. I mean, if you drive around even Toronto or any big city in the US right now, and you drive by a bank branch, there's still a massive lineup to get into that branch just to access your money. So people love the idea of being able to open up a bank account in less than 60 seconds and then be provided a product that allows them to immediately spend. And the big traction where we saw was the implementation of the virtual card. Is that a lot of people don't understand that a virtual card that's built on top of a global payment rail allows you to use your debit for purchases rather than using a traditional credit card. So what we've seen, especially with our millennial demographic, is that they're using the virtual card for everything subscription-based. So instead of going into debt and using a credit card for your subscriptions, now you could actually use your debit card. And the other layer on that we do is the automated savings. As much as we try to concentrate on high interest savings accounts and providing high interest back to the consumers, really what consumers want is an automated way to save. So, as much as 1.2% in the industry sounds high, to the consumer, it's really nothing. So there's a huge opportunity to actually automate that. And that's what we've done, is that we've automated savings accounts that essentially top up your account every time you transact. So at the end of the month, instead of, thinking about, hey, you know what, I don't have enough money to buy my books for school, or I don't have enough money to travel to the trip that I want to get to, essentially you've got $200 saved aside. And that's really important, because when you look at the stats out there, I think the stat in Canada is less than 80%, or the majority of people out there, 80% of consumers have less than $1,000 in their savings account. So it's really not necessarily about providing an interest rate. It's really helping them save and automate that savings. We've implemented that on the Credit Sesame side and Sesame Cash as well. And the big thing that we've layered on top is the merchant funded offers and rewards. We provide essentially cash back at point of sale, and the majority of discounts can be anywhere from 30% to 50% off, which is a huge savings opportunity for individuals out there, because the fact of the matter is everyone is very secure about their money and trying to keep as much as possible. So if we could eliminate the fees of traditional bank accounts and layer on rewards every time they transact, that's a very differentiated experience from traditional banking.
Yeah, no, I fully agree. I think at the moment, I think Canadians are $200 away from insolvency is the fact from that we pulled from OBIC. And any dollar that you can save the Canadian consumer can drive them closer to be in control of their funds, which is incredibly important and absolute need in my mind for open banking to truly give you guys the opportunity to truly help the Canadian public. So Kartik, I'm going to go to you, but I'm going to spin the question a little bit more on adoption and open banking and Canadian consumers, and how you guys are helping them, with the high interest savings to truly drive, a better vision on where their savings are at, and just what's the way to interact with this market to ensure that they're, growing as you guys are growing as well.
Yep, absolutely. I think that's a great question. And so, we back in June, sort of when we had released our public sort of numbers, we had about 125,000 customers, and we've been growing quite rapidly since then. And what it really helped us in terms of growth has been sort of the fact that our value proposition has become a lot more clearer in the market over time, more so as a result of the pandemic that I spoke about earlier. And this value proposition is all about essentially making banking easy, transparent, and fair for the customers, but at the same time, providing real financial value to them. But while in the process of doing this, we are essentially faced with two challenges. One is Canadians generally seem quite satisfied with their banks, even when the service which they receive is not on the same par with sort of international markets. And so in that case, how do you create awareness in an area where people may not be as interested? And the second piece is there seems to be an overwhelming feeling that all the banks are exactly the same. Which in turn substantially raises the barriers you have to overcome in order to make customers switch. And so for challenger banks like EQ and others, the question is that we're trying to answer every day is, how do you make people aware of our value proposition without huge marketing budgets? And how do we sort of break down preconceived notions that, switching is difficult, when in reality it is not necessarily the case. So it's definitely a challenge that we are excited about and are starting to gain a lot of traction over the last couple of quarters.
Yeah, thank you for that, because I know high interest savings account are definitely something that's driving Canadian public to pay attention. And as mentioned earlier in the panel, just Canadian consumers are just much more aware and doing a lot more research since the pandemic. So as Hannah, you guys are looking into that same perspective, how many Canadians are you serving today? And just from that perspective, how do you see open banking kind of pushing that forward?
Yeah, we're helping about 1.5 million Canadians across all our products. And open banking, I can tell you from firsthand experience that the lack of access to data is one of Wealthsimple's biggest hindrances when it comes to making better products and making them available for everyone. And I think Miro listed some great examples around deriving insights for clients and helping them make meaningful decisions around what their financial picture looks like. And having access to open banking data, whether it's through API standards or other frameworks, would significantly help clients be able to save more, invest better, spend better. So a really simple example, I think, that a lot of us can relate to on this panel is around like screen scraping. So if a Canadian banking consumer wishes to make use of their financial data or share it with a third party like Wealthsimple, as a workaround in the absence of an open banking framework or open banking APIs, the fintech industry uses screen scrapers like Plaid or Finx to access this information. So this is when a consumer chooses to enter their online bank ID and password in a third-party application. But this is predicated on a really shaky foundation. So if a bank decides to change its interface or implement two-factor authentication, that could easily break the service. And also, depending on the bank, that could also be a violation in terms of use for the account. So, to illustrate how we've been trying to be mindful in helping our consumers save better, similar to what Miro mentioned earlier, the interest rate is one thing, but helping consumers better understand how they can save better, get into better spending habits and saving habits. We introduced in 2018, this feature called Roundup, where it allows clients to enter their debit or credit card to allow their Wealthsimple low-fee investment account or high-interest savings account connectivity. So what we do is we round up each purchase on a client's payment card to the nearest dollar on a weekly basis and deposit the difference in the Wealthsimple account of their choosing. And since we launched this feature in 2018, thousands have signed up, and we've collectively saved over $1 million in spare change. And more significantly, what we saw was many clients who start saving using Roundup later graduate to make more significant transfers into investments or savings accounts and do so on a regular basis. The problem is, though, that Roundup requires a consistent and stable connection between clients' payment data stored in their bank account and Wealthsimple. And so clients that have chosen to use, Roundup and share this data for the purposes of rounding up their purchases are constantly experiencing, disconnections. And on every day, on average, 10 connections between Wealthsimple Roundup and the client's financial institution fail because we lack actual APIs to make this connection. We're kind of hacking it together. And because of this, clients are not able to, properly use things like Roundup or other features where they're able to leverage their information that they've chosen to provide and utilize these features. And an open banking framework like Direct Access with an API could help solve for this.
Yeah, no, passionate answer. And I fully feel the same way, trying to give Canadian consumers the same experience, no matter which bank they choose, and even if that is a challenger bank. So Miro, I know you probably have had some challenges in that same respect, but how many Canadians are you serving today? And I guess in the same question, how many Americans are you guys serving? And what's your thoughts on open banking and how that might enable additional growth for you?
Yeah, absolutely. I mean, as we mentioned, we launched Sesame Cash just about 3 to 4 months ago, 500,000 customers onto the platform, very much using an open banking technique in order to do that. So essentially acting as the hub for KYC, for authentication, for fraud, compliance, risk, AML, all doing that internally, right? And controlling those rules. Built out Stack in Canada as well, well over 80,000 customers on the platform as well. Where we see the opportunity with open banking is that we have been working with the Canadian government and the open banking panel. There's a huge opportunity with the evolution of compliance rules and regulation that, one day we could essentially open up a bank account with the Bank of Canada and have a direct connection with the Bank of Canada and the rails. That would allow us to essentially have that account and have those balances and deposits on our own accounts. Right now, we partner with sponsor banks in order to do that, but having that connectivity essentially changes the game in terms of the economics, in terms of the products that we can offer to our consumers. So we're pushing very heavily on that. I know, Michelle, you're pushing very heavily as well on the open banking panels that are out there, especially the symposiums that are out there. We see a huge opportunity to escalate those conversations and be the champion out there, because I think what's missing is that when it comes to open banking, we're getting a lot of input from the traditional banks in terms of what customers want. And I don't think that there's an actual voice from the consumer in terms of what consumers actually want. We could frame a conversation in terms of what benefits the traditional banks, but that doesn't necessarily, transmit to what consumers actually want. And, Karthik brought up a really good point in terms of, there are stats out there in terms of consumers are kind of satisfied with their existing banking relationships. I would kind of look at that on the other side of the equation, is that when you look at the majority of consumers out there that have a traditional bank account, right now, those accounts have a monthly fee just to access your funds. That could be anywhere from $16 to $20 a month just to have that account. And then when you layer on top of it all of the fees and the minimum balance that you need in order to essentially eliminate those fees, consumers aren't necessarily being served as well as they can be. So we see that as a huge opportunity in terms of everything that we're doing on the challenger bank side, but driving those open banking relationships to essentially build products that will be beneficial for the consumer rather than beneficial for the banks.
Yeah, no, fully agree. So we only have 8 minutes left. So I'm going to let Saud answer this question as well as Michael and get to our closing thoughts. So Saud, I know that you haven't launched yet in Canada, but maybe just on a global perspective, how many customers are you guys serving at the moment, and how do you see open banking helping you, as you have obviously different challenges in Canada than any other market?
Got it. So globally, we have about 12 million retail customers, and then more in Canada. We have about 10 to 20,000 retail customers that are in our beta, and then we have about 30 to 40,000 more on our wait list. So we're excited to get them on board. With respect to open banking, I want to touch a little bit on Miro and Karthik's point, exactly that Canadian consumers may be okay. They may be happy with their offering. It's because they don't know otherwise. Like you don't know what you're missing. If we were to go out and do a poll today and ask how many Canadians would love if there was Cash App in Canada, they would say, no, we're okay. We have Interac e-Transfer. That should be fine. It was the same for me when I moved to London. I truly realized at that point how far behind we are in Canada. We're getting there. There's lots of great companies on this panel right now that are trying to get us there, but we have so long to go. And then open banking is a pretty good example of that. Touching on Hannah's point, we're pretty lucky in Europe where we have the Payment Services Directive, which mandates financial institutions give open access to their data. It's not mandated that it has to be through an API, but that's a method that makes more sense. So it went all the way up to the European Union, who mandated that all of the financial institutions have to do this, because that's how it should be. It shouldn't. If it's the banks deciding what consumers want, what information to share, there is going to be a little bit of bias over there. So I think open banking, model it something a little bit more after what we have in Europe, and get feedback from consumers in Europe. How do they actually feel about this? Because we already have it. I think that's the path forward.
Yeah, I think that's an exciting point, because there's some work happening, and I think hopefully Canada is making a move forward, especially with having a panel like this where we can have challenger banks really share the advantages that are happening for Canadian consumers, so that they can not get rid of their Canadian core bank account, but supplement not having to pay $30 a month just to have banking services and find different ways to save money. So Michael, if you could answer quite quickly, I definitely want to get to closing thoughts, but how many customers are you guys servicing, and what's your thoughts on how open banking can help you guys expand?
We are servicing 300,000 customers, signing up new customers at a rapid pace every day. Open banking is happening anyways, but as Hannah said, in a hacky way today. I think true open banking would actually make the entire industry more secure. It would commoditize some services, which I think needs to happen in the industry, but it would actually be in the best interest of all the players to unite on an open banking framework, so you don't have things like screen scraping and security risks and people being almost forced to violate their cardholder agreements. So we've been very supportive of open banking at Koho.
Thank you for that. Yeah, and I wanted to end on a note of the biggest misconception in the sense of challenger banks, that there's a lack of long-term profitability. I know it's a big question to try and tackle, but I want to start with Kartik, largely because I got the opportunity to work with EQ, and they have some exciting announcement that they want to share on the panel. But then hopefully we could all do that in 1 minute and close this off. So off to you, Kartik.
Perfect. Thanks, Michelle. And so monetization and profitability is definitely something that we think a lot about, especially in the environment where customers expect no fees, but then we're also trying to sort of pay out premium interest rates, part of EQ Bank's value proposition. So we are part of the Equitable Bank, which has a strong lending business, which allows our overall combined entity to be profitable. But we constantly think about avenues to drive that further. And so an exciting announcement that we would like to make is EQ Bank will be getting into the BIN sponsorship business, which essentially involves securing a BIN from the major payment networks and then licensing its use to partners who want to issue a wide variety of prepaid cards. And so we will be putting out a formal press release shortly, but this is all about leveraging the payments infrastructure to support fintechs, challenger banks to drive innovation and financial inclusion in a rapidly growing prepaid card market. So excited to help grow this even further.
That's exciting news for the entire Canadian market space. In less than 30 seconds, I'm going to go around the room. Saud, share with us your thoughts.
Yeah, exactly. So I touched on this a little bit earlier. So there are slim margins if you're only looking at interchange. It's only going to get you so far. So diversification. So we have our retail product, we have our business product, we have our wealth, and under wealth we have trading, we have crypto, we have commodities. So it's the diversification of our product offering that's going to help us get to profitability, and also our in-house first mentality, which helps us sort of maintain those costs and help us with international scale. So we're on a clear path to profitability. So confident we'll hit it soon.
Thank you, Mero.
Yeah, we're excited as well. I mean, in the next several months, we're going to be hitting profitability as well. The way that we've differentiated ourselves is that we've created a white label platform that allows an entire ecosystem of money services and loyalty to be layered on top of that. We've already onboarded through a partnership with Celero Solutions here in Canada, over 120 credit unions with over 4 million customers onto the platform. We've got deep experience in program management, card processing, branding. So we do it end to end. We not only provide the BINs, but we also provide the end-to-end program management, essentially the fraud, risk, compliance, AML, all of that in-house. And we're currently working with a global lifestyle brand that we're going to be announcing very shortly to launch a loyalty and money service to over 2 million customers across the world. So I'm super excited about that.
Thank you. Hannah, super quick. I want to get Michael in there too.
Yeah, really echoing both Saud and Miro's points on like ensuring we have a diverse portfolio that isn't just centered around a payment product. Our core offering is still in the wealth management space, and stocks and crypto. And we use Wealthsimple Cash, which is our challenger bank, as a gateway product into our ecosystem, as well as a way to sell for our clients' everyday banking needs. And so the short answer is we have a strong product strategy where we have a mix of profitable products and products where we focus on low friction client growth, and then cross-sell these products to get clients embedded in our ecosystem.
Thank you, Hannah. Michael, super fast.
Yeah, Canadian banks are the most profitable in the world. We have banks making $12 billion a year in profit, a 25% profit margin. So there's a lot of slack in the system to give back to customers, and that's what we're doing. So we're also about the broad relationship there, and we make money off premium, which is a voluntary thing. We make money in a number of ways, but we're not going to do things like charge credit card insurance with 85% profit margins, charge bank fees just for the privilege of giving us your money, where you're paying like $160 on average in bank fees. That's not what we're about at Koho. It's all about mutually beneficial relationships, and there's enough profit to go around without the gouging.
Thank you so much. This has been such an exciting panel. I'm so happy I got to be the moderator today. Thank you, Jennifer. And thank you, everybody, for your time. I hope everybody enjoyed it. I apologize I didn't get to our one question, but maybe we could handle it offline.